By the time the deck comes up, I'll just start the discussion. So thank you, Mr. Kocher, for having me here. Now, Dr. Garg spoke about the indicators for Viksit Bharat, and he talked about the GDP. A $30 trillion economy is what we're looking for. A large part of it is going to come from the digital side. And within that digital side, digital gaming is going to be an important area. Now, this topic in a way is also complicated, but then it's quite interesting also. So I'll try to give you a perspective on what are some of the areas that the government has to look at, what are some of the areas where the risks come in this kind of a business, and what is it that's happening with various regulators, etc. So I'll just give a perspective on that. Now, when we talk of gaming, we understand there are apps on phone, there are apps on laptops, there are PlayStations and Xboxes, and all of that forms part of digital gaming. And we spend money and we buy some assets there. So maybe we are if it has guns and all, we are upgrading the guns. If it has cars, we are upgrading the cars, and we are paying for it, right? And we are paying to the company that's running the app, and a part of it may go on to the platform. So if it is an Apple ecosystem or a Google ecosystem, part of the money goes to those Play Stores and App Stores. So where does money laundering come in here? How does that happen? Where does the currency come in? Where do virtual assets come in that kind of a system? And that's where the interesting aspect comes in this whole industry. So when we talk of currency, basically, it's a form of money, right? It's a form which is authorized by the government, it's issued by the government typically, and it forms a sort of a value or a system through which some trade can happen. Right? That's the broader sense of currency. Now, when we talk of digital currency, there are certain aspects that change. One is that it doesn't have a physical form. It's all virtual. The second is it's not issued by the central government or the RBI or the central bank or wherever. It has nothing to do with the government. It's all private. And it is in systems that are very, very difficult to trace, right? So when we talk of digital currency, that's where the complications start to come in. Now, there are certain aspects of digital currencies that are very common. They are being used, and they are being used not only in gaming, they are being used in general transactions also. And I'll talk a bit about it, and I'll take you through what all some of the common ones are. So we've all, I think by now, heard of crypto, we've heard of Bitcoin, we've heard of various issues that have happened with these cryptocurrencies and all. So cryptocurrencies are essentially, or digital assets are basically a form of currencies that run on a system called blockchain. What we need to understand in this is that there are two aspects that are important for cryptocurrencies and that form the foundation of cryptocurrencies. The first is, it is decentralized. Now, what does that mean? It means that the data that is there, so normally when we are, let's say we're doing a transaction on Amazon, the data that we have are our data, our financial data transactions, as well as the product data. It sits on a server that's owned by Amazon, right? It's at one place. But when we talk of cryptocurrency and when we talk of blockchain, it's not like that. These are stored on multiple computer systems across the world. That's what we mean by decentralization, which means when we have to get the data, it becomes that much more difficult to access that information. The second aspect is anonymity. The whole system is based on not knowing who the ultimate beneficial owner is. And that is the foundation on which anti-money laundering is based. KYC forms the first cornerstone of money laundering. You need to know your customer. But in these assets, it's very difficult to have the KYC systems in place. Okay, so that's about cryptocurrency. Then we have non-fungible token, NFTs. Now, these are also form of cryptocurrencies. They are a subset of cryptocurrency. The only thing is, let's say you have one Bitcoin and another Bitcoin. It's the same thing, right? It's the same, it's Bitcoin. But each NFT is individual. It's a cryptocurrency, but it's individual. You can't have multiple forms of the same NFT. Okay, so for example, if I take a picture and I create a currency out of it, it's just that one picture and it can be bought and sold. Okay, a difficult concept, but I think from a money laundering perspective, all we need to understand is that this is another form of currency. It is traded, there is a market for it, and it's bought and sold in real money. Then there are gaming tokens. So when people are playing games, there is currency within those games. That can be exchanged. Again, virtual currency can be exchanged, and then some games allow for it to be turned into real money. Okay. For example, let's say you're playing rummy. I mean, a simple case, you're playing rummy, there are these counters and all that you're using. You can play it in a casino, you can play it virtually. At the end of it, it gets exchanged for money, right? So those counters are essentially gaming tokens. Now they can take multiple forms, but that's the concept around it. Then you have gaming skins. So if I have a gun and I want it to look better, it look beautiful, I will have a skin. Like I have a skin for a phone, a cover for a phone, I'll have a cover for a gun. I may have accessories for a car, I may have a lot of things that come as a package in a game. And again, we pay for it in real money, but then there is a secondary market where these skins can be traded. I can, let's say if I am playing a game with one of you, I can actually, sell you that skin, that I have this, it's a rare skin, it's not easily available, so let me sell it to you. That's another area. Metaverse real estate, again, something that exists in virtually, there is real estate and it has been increasing in value. And just to give you a perspective on the kind of returns that have come in, if you had invested $20 in a metaverse real estate in 2017, it would be worth over $15,000 now. That's the kind of return that's come in a 5 to 6 year period, right? So a valuable asset again. Virtual, we don't know whether that company that's hosting that asset is going to exist 5 years down the line, right? Because it's end of the day, it's some company's property and it's selling it to you, it's selling you a right. That risk is there, but it is for now gaining in value. And then we have DeFi tokens, again, form of tokens that can be exchanged over the net. So these are the prevalent digital currencies that are there and they get used in gaming. Okay. Now, so how does money laundering happen in this universe? I'll start with a simple case and then I'll give you more examples. So a simple case is that a person X buys drugs from person Y. Now person Y has a lot of illegal cash sitting and that has to be turned into white money. So X, now instead of paying cash, X pays Y with a currency called Monero. It's a cryptocurrency. Bitcoin, we all know, Bitcoin gets exchanged, Bitcoin gets traded on exchanges and all. Monero doesn't. It has been designed to be, hidden. It is a private transaction, not disclosed, not declared, not traceable. So it goes into this currency Monero. Then it goes into the dark web where Y exchanges it for Bitcoin. Now Y has some sources of Bitcoin. That goes into, converts into dollars, maybe let's say in Dubai. It can happen in other countries also, but let's say in Dubai. Comes into India via Hawala and is shown as income via inflated imports. That's one form, one chain of how money laundering can happen using a virtual asset, right? A cryptocurrency. Now the second bit would be that instead of going into dark web and Hawala and getting it converted into dollars, now what Y does is invest the Bitcoin into a game. gets chips can either win the game or lose the game. If I lose it, the chips go to someone else who then converts it into dollars and sends it to me via Hawala. If I win, I have again a source of money that's come from gambling, and I declare it as my income from playing cards. That's another way of, a simple way of turning cryptocurrency into real money. Now when we look at versions of it, so let's say I have, like I said, I have certain skins. There is something called a loot box in a game, which is basically a box with goodies in it. Okay, it will have skins, it will have points, it will have some cheat codes, it will have a lot of things that can again be traded in a secondary market. So I have that, I create that, and then I sell it to person Y, and that person then gives me some money, and now suddenly there is a transaction that's happened in the gaming sector. Okay, so these are some ways. In India, what also happened was that in this case of people playing rummy and all, or in winnings of lottery, there were transactions happening through the banking channels or the RBI channels, and money was being moved around, sometimes even through Kirana stores. So there are ways of moving around money, and there is a market that's there in these games. And we call it, there are two sets actually. There are micro transactions and there are these loot boxes and all. Micro transactions are small transactions. They don't get traced. Let's say 3,000 rupees, 5,000 rupees. They will never be flagged in a system which is tracking money laundering. And there will be hundreds of such transactions that will go through the digital game, virtual game. So what are the risks and what are the regulatory issues? The first part I talked about, decentralization. Data is available across thousands of computers across the world, not stored in one server, very difficult to access. Anonymity I've talked about, you don't know. To start with, like we talked of Monero, nobody knows where the Monero coin, who's holding those currencies. In-game assets have become very liquid, either over the dark web or on exchanges. They're traded in exchanges. There are even games where when you reach a certain level of points, you can redeem that for money. Okay, so there is all of it happening where in-game assets are actually getting converted into money and coming back. Then there is dark web involved. If it goes onto the dark web, again, tracing it becomes very, very difficult. Agencies, few agencies actually in India have the skill to navigate the dark web and actually trace transactions. And last bit is the valuation. So now, Mr. Kocher was talking of the parameters that are there and the risks that are there. How many people who actually play those games, they know that or are aware that the tokens and the currencies that they are taking have no underlying value. So when we talk of a rupee, let's say, there are parameters that define the value of a rupee. When we compare the rupee, let's say, to gold, gold standard used to be there. Now it's more related to your strength of your economy, inflation, interest rates, etc. So there is something that is underlying that rupee. Underlying these assets are just a demand and supply. So there are cryptocurrencies that are opened. I mean, there is US election going on. There are currencies being created. There people gamble on it and they disappear overnight. They shoot up 100%, 2,000%, 2,000% in a matter of minutes, and then they go off, right? So people don't understand that kind of a risk, and there is no system that is educating them for these risks. Now, when we look at regulatory issues, again, regulations outside India have started developing. In India, the challenge is that we still don't know what we want to do with it. RBI initially flagged it off as risky, and rightly flagged it off as risky. It is risky. They banned it. Supreme Court overturned the ban, and RBI said, okay, let's make it difficult to happen. We need all of the regulations. So companies actually had to, any company involved in these kind of currencies and assets and all, had to have certain systems in place. So you needed to know who you were dealing with, who were the owners of these assets. You needed to have sophisticated systems in place to flag transactions that were suspicious in nature, right? So they brought in those. Now, income tax realized that this is an asset that can be taxed because there is a value movement that's happening. So in 2022, we got the taxation on these assets. So whatever increase in value happened, if you bought at X, sold at Y, Y minus X into 30% is the tax. No benefits of indexation, no costs that can be deducted. If you had a loss, however, you cannot carry it forward. You cannot adjust it. So only the gains get taxed. Then SEBI came in, and SEBI says that there are exchanges on which these assets are being traded, so we should have some say in it. There are virtual assets that also are in the nature of securities, so we should have some say in that too. There is IRDA, because some part of insurance contracts can run through blockchain. So, multiple regulators, multiple views, we still don't have a concrete view of how we want to regulate these assets and the gaming industry, which forms integral part of these assets. Then there is a problem of jurisdiction. A crypto exchange can run anywhere in the world and can get accessed over the net. It's very difficult to track and stop. Even now, there are so many such apps and things that are available in India on which people can trade, and they don't require any KYC. There is no system in place that can track these. Right? So that's another challenge. While the government says that if you are actually running an app in India, you need to get registered, you need to have all of the regulatory systems. But that is yet to be implemented in full. Then comes the issue of valuation. Like I said, how do you value? What's the underlying system on which you can value these things? Right? So these are some of the challenges, and of course, data privacy. A lot of information is private, difficult to access, so it becomes a challenge. Right? So these are some of the issues around virtual assets and around gaming. And I'll also talk a bit about the taxation side of it. So on the gaming apps, what basically happened was earlier the government used to make a distinction between gaming and gambling. So all these lotteries and all were considered gambling, and the GST was 28%. In 2023, government said that, the GST Council rather said that the distinction between gaming and gambling should not be there. And they said everything will be taxed at 28%. Applicable from 1st October 2023. However, the notices have been sent, and they have been sent with retrospective effect. Now the matter is under the Supreme Court. There is a thought that the government will also withdraw this retrospective effect of it. But the challenge that comes with such kind of retrospective taxation is that it sends a very wrong signal to the investors and the business community at large, because it creates an uncertainty about the business environment. So that's the issue on the taxation on gaming. There is a larger issue of taxation on virtual assets also. And some of the factors that we've discussed, the part that where is it originating from, which jurisdiction, which state, if I'm levying GST, where should I levy? Which state gets it? Or which country it goes to? A big issue. What should be the value? How do I define it? How do I assess that what was the value at which it was purchased? Classification. We still don't know whether eventually it's going to be money, or it's going to be an asset, or it's going to be, something else. Then the issue of, I think mostly these are some of the challenges. And what if, let's say, a new token is created? The issue with all these virtual currencies is at any point in time you can create a new one. So if a new currency is created, what's the value? What's the initial value of that currency? And how do you look at it? Right? So these are some of the aspects that are going to challenge, they're going to be a challenge when you're taxing the overall setup. Now, on the gaming side, of course, there is, I think by the end of the year, there will be some certainty coming in. Hopefully the retrospective bit will go. There will only be, prospective taxation. even then, the industry is demanding that it should be 18% and not 28. So that is another thing that may get looked at some point. Right now, it's not being looked at. So that's where we are on the taxation side. And as far as the FATF report goes, actually, India, in terms of virtual assets, the FATF has said that virtual asset service providers are actually, they are aware of the issues, so which sort of comes out in the survey that SKOCH has done. So it shows that on the risk side and all, there is that systems are better. They are being put in place. It's just that how well are the transactions being monitored over these systems? That's where things will have to improve.